Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Tuesday, May 13th, 2025. This is Nelson John. Let's get started. A double dose of relief sent Indian markets into celebration mode on Monday, with India and Pakistan agreeing to a ceasefire and the US and China putting their tariff fight on pause. Investors rushed back in, fueling the sharpest market rally in over 4 years. The Nifty 50 surged 3.8% to 24,924, while the Sensex jumped 3.7% to 82,429. Now, that's 16 trillion rupees in investor wealth added in just one session. Ceasefire removed the sword hanging over the economy, said A. Balasubramanian of Aditya Birla Sun Life AMC. Short covering and strong delivery-based buying powered the rally, led by IT, financials and heavyweights like Reliance, Infosys and HDFC Bank. Foreign and domestic investors net bought shares worth over 2,600 crore rupees as India Volatility Index plunged 15%, signaling calm. Optimism now pivots to earnings and consumption trends, with March quarter numbers surprising on the upside. While the US-China tariff thaw is seen as a temporary fix, experts say India is well placed to attract global capital. We are in a sweet spot, noted Marcellus Saurabh Mukherjee. With global tensions cooling and fundamentals improving, some believing 2025 could mark the beginning of a new bull run for emerging markets. Donald Trump's vow to slash U.S. prescription drug prices by 59% has sent ripples to the global pharma world, and Indian drug exporters are watching closely. "We're going to pay what Europe pays," Trump declared, signaling an executive order that forces drug makers to match the lowest global prices or face regulatory action. The move targets branded medicines, which make up 91% of the U.S. drug market by value and are often 4 times costlier in the U.S. than elsewhere, according to Rand Corporation. But what does this mean for India? For now, not much, at least for makers of generic drugs, which are already priced lower and dominate 90% of U.S. prescription volumes. Experts say companies like Sun Pharma, which earns up to 17% of its revenue from high-value branded specialty drugs in the US, may feel the heat if the rule is enforced. Its stock dropped over 3% on the news. This isn't Trump's first battle with Big Pharma. His 2020 attempt to impose price caps were blocked in court, and analysts expect legal pushback again. But for now, Indian pharma is bracing for uncertainty in its most lucrative market. Yes Bank may have just pulled off its biggest confidence boost in years. A proposed 13,482 crore rupees investment from Japan's Sumitomo Mitsui Banking Corp, SMBC, for a 20% stake is not just about fresh capital. It's a pivot point. The deal achieves 3 things, said CEO Prashant Kumar: removing the overhang of SBI's stake, bringing in a global strategic partner, and addressing long-standing credit rating concerns. Kumar expects the deal to get all approvals by September and is hopeful it could lead to a re-rating of the bank, reports Mint's Gopika Gopakumar and Shayan Ghosh. Yes Bank has been under a cloud since 2020 bailout led by SBI after the RBI stepped in. Now, with one of Japan's largest banks also ranked 15th globally as a potential anchor investor, the narrative is shifting. Kumar dismissed a domestic M&A route, citing integration hurdles. A private equity investor, he added, wasn't ideal due to short-term motives. What we need was a long-term partner, not survival capital, he added. Analysts are cautiously optimistic. While SMBC's stake and voting rights will be capped, the strategic intent is clear. With volatility behind it, Yes Bank is pressing pause on acquisitions and focusing on sealing this transformative deal. French payments giant Worldline is looking to pull out of India, and it could be a $200 million deal in the making. The company has reportedly tapped BNP Paribas to scout for buyers in what may turn into a competitive auction among top Indian fintech players. The move is part of a broader global reset under new CEO Pierre-Antoine Vacheron, who's steering the company through stormy financial waters. After 3 profit warnings and a CEO shakeup in 2024, Worldline is tightening costs, cutting non-core businesses, and chasing free cash flow. We need to be more selective, Vacheron said last month, hinting at exits from inherited geographies. India, it seems, is one of them. Worldline's local B2B payments operations, serving banks and large merchants, could be a juicy targets for home players like Razorpay or PayU looking to scale fast. The company's Q1 2025 revenue dipped 2.3% year-on-year, and it posted a €297 million net loss for 2024. With investor pressure mounting, the Indian exit could free up capital and refocus strategy. A deal could reshape India's payments landscape. The only question, who will swipe right? The old guard is back in focus at Hero MotoCorp, with top-level exits shaking up leadership, including CEO Niranjan Gupta. 71-year-old executive chairman Pawan Munjal is once again the man in the spotlight. The timing couldn't be more critical. Hero, still the world's top two-wheeler maker by volume, is watching its lead shrink. Honda's aggressive push has narrowed Hero's once dominant lead to just 300,000 units. And in the electric vehicle race, it's trailing badly, far behind TVS and Bajaj in EV scooter sales. Now with interim CEO Vikram Kasbekar at the helm, Hero faces three big challenges: finding a full-time CEO, reigniting growth, and gaining ground in EVs. Munjal's leadership could be pivotal, just like it was post the Hero-Honda breakup. Investors are cautious. The stock has fallen 4.5% this year, while rivals surged ahead. Ahead of Tuesday's earnings, all eyes are on five key levelers: revenue growth, profitability, EV strategy, premium motorcycle push, and exports. One bright spot with 44% growth. Analysts expect only modest revenue gains, but improving margins. For Hero to regain its edge, Munjal's return may need to spark more than just nostalgia. It needs a bold pivot. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a great day.